Michael, how do we know what is and is not priced in?
It's always more art than science, but I think you can look at a few things. As it relates to this tax discussion, you can look at the high tax index. Deutsche Bank and Goldman Sachs have high tax indices, and you can look at those outperformance relative to the S&P, and there have been huge outperformers just in the last 3 weeks as the tax discussion really got into gear, and it's now looking, almost like a done deal right now. But I think what that's also telling you, when you go cross-asset, you look at the dollar hasn't really moved off it. Long-end rates haven't really moved off it. I think that's sort of telling you that it's more about corporate earnings than it is necessarily about a pickup in growth.
Vadim?
Yeah, I tend to agree. I think indices have perhaps largely discounted passage of a tax bill with relatively low impact. What's really not priced in, and because we don't have all the detail, what are some of the unintended impacts? Whether they're going to be impacts on companies with very high degree of debt leverage, whether it's going to be the impact on real estate. That's where the excitement is going to be next year. I don't think it's going to be at the top level indices.
I'm just wondering where the positive surprise is going to come from in the next year. If we look at the City Eco Surprise Index for the United States, and we can put that up on screen for our viewers, it is almost vertical over the last couple of months, bottoming out around the summer and then just ripping higher through to the end of the year. Where's the positive surprise going to come from, Michael?
I think one of the surprises maybe really is that an assessment as we get into first and second quarter of where are we in the credit cycle, right? Because it's very easy to look at this sort of loose fiscal agenda being put on the back stages of 7 or 8, 9 years into an expansion and saying, oh my God, this is going to be the final, we're in the 8th or 9th inning of this game. If we get more of this sort of steady grind in GDP without a pickup in inflation, and commercial banking remains to be conservative, lending doesn't really accelerate, I think you can actually make the case that we're actually going to be into an even more extended credit cycle, in which case you can have sort of an upside from there. But in terms of specific news catalysts, I have to, you look at that chart and you kind of wonder.
Sticking with Goldilocks?
Yeah. There are two things that I would look for surprises. On the upside first, the capital spending. Yes, people are expecting strong capital spending, could be somewhat stronger than consensus believes. On downside, rising unit labor costs. That was the biggest surprise this year. The fact unit labor costs did not rise to the extent we see increases, I would see that as a significant negative.